last year, was really the perfect storm, a tsunami. This year we might have a rainstorm.
$13 billion in additional funding coming into the Medicare industry.
Everything should be the same as it was last year. Right. And that's not the way it works with healthcare costs.
There is an adjustment to the rate of what the federal government's willing to pay for these services. Last year, we expected and we did see significant disruption.
Well, welcome to this edition of the MediConnect Medicare Made Simple podcast. I'm Lance O'Brien, CEO, here with Brian Breisinger, president, owner, and master of ceremonies.
Thank you so much for having me. I'm excited.
Absolutely. I know you've been in this space in many different facets for a number of years, but you're not normally behind the camera anymore unless you're doing commercials for us, right? But if you could just let everyone know that's listening today a little bit about yourself, and then we're going to jump into today's topics.
Sure. So as you mentioned, Brian Breisinger, president of MediConnect. We've been doing this a long time, right, Lance? I've been fortunate to have you really running the show and leading the helm for the firm. So thank you for that.
Absolutely.
But yes, this all started years ago when I was in a meeting as a financial advisor. Met a woman, her husband passed away, told me, she needed help with her investments. But lo and behold, we found out that she was having significant problems with her Medicare.
Yeah.
And as you know, that sort of was the catalyst that started us down this path of, creating an advisory firm to be there as an advocate in the community for the people to help them make better Medicare decisions. And that's where we have gone over the last, 10 plus years. We've reached this level now where we're pretty much the largest advisory firm in the whole region now, specializing in this area. So very proud of that. Very happy to be here today. And hopefully we'll get into some good topics and discussions.
Yeah, for sure. The mission's basically stayed the same since the very beginning, right? Like we want to get great education out to people so that they can make informed choices, because a lot of times when we see mistakes and things happen is when they don't really know what they should be doing. And, a big piece of paper just came out. It's actually a lot of paper, right? 1,000 pages or so,
unfortunately,
of the final notice. And, for people listening, they're like, well, what's that? Because normally when we hear final notice, they put it on our door, like, this is your last chance to pay your rent or whatever, right? But like final notice is a big document because it lays out what changes are going to be coming to Medicare in the next year. And we're going to spend some time talking about that today.
Sure. Yes. In our world, it's very, very important, right? It sort of sets the framework for what we can expect for the next enrollment season. And the consumer, they probably aren't aware of it. And, it's not something that's publicized much, but it's there. It's an open document for everybody to read. But it's really critically important for folks like you and I, for the Medicare Advantage insurers in particular. Right. It's setting the stage of what the roles of engagement are going to look like for the next upcoming season, which helps them in their bid process when they're developing these plans. Yeah. As we've said many times, Lance, a lot of people don't fully understand and grasp the concept, but Medicare Advantage plans are annual contracts. It's not an insurance policy.
Right.
They're two different things. So these plans can adjust, right? Yeah. Year to year. And people that have been on Medicare for a few years, they've probably experienced it and they've lived it.
Yeah, and that's why we want to dig into this today, at least start that journey, because they're not going to think about Medicare till October, November, right? Some of them not till December 6th,
yeah,
right? But we're going to get there ahead of time to kind of lay a foundation of what they might expect. So yes. We're going to get into the rate adjustment, right, this year, risk adjustment. We're going to get into star ratings, and everything that kind of helps us to give them a picture of what things are going to look like.
Yes, general picture,
yeah,
right? Because I think that's going to vary by insurer. It can vary contract to contract, but at least gives us a general idea of where the wind's going to be blowing come the enrollment season. I think it's important for people to at least get a little bit of a heads up on that.
Yeah, looking forward. It's going to be a great discussion today.
Awesome.
Yeah, so as we jump into the final notice today, it's published by CMS, Center for Medicare and Medicaid Services. That's basically the governing body for Medicare, right? So they put this document out. It's actually the second piece of a two-part process, really. You have the advance notice that comes out in February. They start saying this is what we're thinking about doing. And then everybody comes back and says, oh, no, change this or do that, right? And then we kind of get this final set notice. So there's some aspects of this that are super important. So let's dive right into it, because I think the biggest one that the insurance carriers are looking at is what's known as the rate adjustment.
Correct.
Can you talk to us about what is that and what's the impact of that?
We could spend a whole segment just on that alone, as I'm sure you know,
Yep.
Lance. So to keep it in the most simplistic terms, it's how much are they going to get paid, right? This begins and ends many times with revenue, right? So there is an adjustment to the rate of what, right, the federal government's willing to pay for these services. And those insurers need to have an understanding of what they're going to get paid up front, because then they have to actually put together plans, right, that can accommodate what's in the framework of what they need to, but at the same time, hopefully be able to generate some type of profitability at the end,
Right.
right? It's a business.
Yeah.
So the rate is one of the most critical points. And interestingly enough, whenever they come out with the advance notice, those proposed changes, right, to come out, using that January, February timeframe, when it was announced, the rate was relatively low.
Microscopic almost.
Right. And that creates a lot of buzz in the industry, right? And we were experiencing it. The carriers were experiencing it. But the nice part is CMS allows for this comment period where you can go back and forth, talk through it. What would the potential impact look like, right?
Yeah.
And ultimately, they ended with a rate that was significantly higher than what they proposed originally, right? At the tune of about $13 billion in additional funding coming into the Medicare industry.
Yeah, because like when we say it's a 2.5% rate increase, right? That doesn't seem like a whole heck of a lot.
No. And it might not mean a lot to the normal consumer on the
Correct.
street, right?
Right. But when you put it into real dollars, 13 billion more is being infused into the Medicare Advantage program, Part D program.
Yes.
How does that, now that the insurance have that information, how are they interpreting it and how is it affecting their behavior?
Yes, and I think that'll go into probably another topic that we're going to discuss here shortly, which is the risk adjustments, right?
Yep.
So it's not just a flat payment for every single beneficiary, right, in the United States. There's other factors that go into play, and that rate can be higher or lower based upon that risk adjustment.
Yep.
Is the term that we use a lot, right? So they believe that when they look at the average risk adjustment in the United States, the number is almost double.
Yeah.
Right. So now you're getting into $26 billion in additional revenue, which really is helpful to the carriers to have an understanding up front. So then when they go through their bid process and they file their plans for the upcoming period, they have a better understanding of what the potential expectations could be on the back end for them.
Yeah. So, and that's the thing, most people that are watching, listening today, they're like, well, I didn't even know any of this really existed, right?
Mm-hmm.
Like the government's paying these insurers and then they're trying to determine how to make profit and all of that. And it is really a two-layered thing, right? You've got the reimbursement rate, right? 2.5%, right? But then you've got the risk score that's coming in. Talk to us about what is risk score and how that marries, because 2.5 is lower than it's been recently, right? But that 2.5 with some of the holdbacks or limitations on the risk score,
right,
made it not be the worst thing in the world ultimately.
Yes. So why is there even a risk adjustment, right? Well, we understand if somebody is, a little unhealthier than someone, than another person, it's going to potentially be a bigger pull, resources used, more services being rendered, right? And it's going to cost more. So as a result of that, there is an additional adjustment in the rate, and the federal government's actually spending more money out
Yes.
for that individual, right? So depending on what your risk score is, and a lot of the beneficiaries might realize it, maybe they don't, but whenever you're going and you're seeing your PCP and you're going to see your doctors, they are doing risk assessments, right? The insurer is helping through, right, the clinic, clinicians to be able to determine what your actual risk score is. And that's determining what the payment is coming from the federal government. Now, the reason why they did that, and I think this is probably even more important, is to set guardrails in place.
Yeah.
Because if you think of it from a business standpoint, right, as an insurer, well, then if I'm going to get paid the same amount of money, no matter who I'm dealing with, Lance, why don't I just go after all the healthy people?
Exactly.
It's a lot harder to manage people, right, that might have, conditions in place,
diabetes, heart problems,
heart conditions. Exactly. So in a situation like that, it's much more difficult to manage, right? So they adjust the rate as a result of those conditions to make sure that everyone's being inclusive. Does that help?
Yeah, it does. And again, I think for the average consumer out there, not really understanding what goes into doing this, because they're probably just like, hey, I'm signing up for a plan. Everything should be the same as it was last year. Right. And that's not the way it works with healthcare costs, right? Like there's rising costs in health systems, doctors, things of that nature. How that money's actually coming back from the federal government into the insurer, that's kind of making this baking this cake, if you will, so that there can be stability for them.
Yes, and we hear this all the time, right? My insurer, I'm either happy or I'm upset, right, on a given year because there's changes happening to their current benefits, and they want to blame the insurer, but many times it starts at the federal government level, right? They are dictating down the potential changes, right, to the overall framework of Medicare Advantage and Part D, and then the insurers have to react off of that, right? Which is why you have these annual swings. Sometimes they're more massive than others, depending upon right administrations, depending upon how CMS adopts the role.
Yeah.
So yes, unfortunately, we're going to continue to have this, right? But I honestly believe at the end of the day, it's like a seesaw effect, right? They're trying to find the happy balance.
Yes.
Lance, right.
Yeah.
And if you go back over the last 5 to 10 years in particular, we've seen multiple rate adjustments. We've seen changes to the risk, right?
Yep.
And other factors, right? Because as you said, we're talking hundreds and hundreds of pages of a document here. There's a lot of detail that goes into that. But I think that's what they're working on, is trying to find that balance.
Yeah. So again, I keep referencing the people that are listening today because I think it's important, but like, what was the carrier's initial reaction to the final notice? I know you're tied in at a national level.
Yes.
You're having a lot of conversations where people are really in the know on this. What are the insurance carriers taking away from the final notice?
Well, I think there's always some element of good and some element of bad, right? But again, you still have to really absorb the information, digest it. Each carrier, it works a little bit differently from one another, right? And that's, I think, healthy for the marketplace. Initially, when the proposal came out, it wasn't good, obviously.
Right.
But when the rate announcement was announced and we did have the increase that everybody was hoping for, it definitely helped to create stability in what the plan bids are going to look like and what's going to come out for the new year, which I think is a good thing. So I think overall, generally speaking, Lance, it's considered a positive. But again, Medicare, we know, is really managed at a micro level, right? One marketplace can look different than another marketplace. We're in Pittsburgh, Pennsylvania. Philadelphia, right across the state, can, only a few hours away, can look completely different. So it's not just carrier to carrier, but it can even be contract to contract within the carrier, right? That can really change.
Yeah.
But overall, generally speaking, because they are some of the roles that are going to be extended for a period of time before significant changes are happening, creates stability for the actuaries with the company.
Yeah, and I think it's really important. I mean, we're headquartered here in Pittsburgh, right? We've got two really big regional carriers, right? UPMC and Highmark. But we also have 8 or 10 national carriers here. And they are viewing this from different lenses based on, not to get too technical, contract rates they have with health systems, things like that, the money that they're getting back. So it really does play a lot into what the final look to the beneficiary is, right? Because that's really what this is all bringing, is they're getting this rate. They're going to now start building their plans, or adjusting their plans is a better way to say it. They're going to be adjusting their plans based to what they heard, and then rolling it out for the consumer come the, September, ANOC, ultimately October timeframes.
Yes. If we were to go back just 12 months ago, the landscape was a little bit different. So if we were to do a comparison between last year and this year, this upcoming selling season, I should say, last year we expected, and we did see, significant disruption, right? We saw it here locally, but we also saw it nationally. Like it impacted everybody across the entire United States. Based upon what we're seeing, at least initially with the rate, I believe that we're going to have a little bit more stability, generally speaking, right, versus where we were just 12 months ago.
Yeah, which 12 months ago, we saw hundreds of thousands of people locally and across the country actually have their plans terminated.
Yes.
Benefits decreased,
significant disruptions.
Yes. Yeah. So it doesn't look like initially it's going to have that much impact. Now, I know there's other pieces of this, and we're going to come back to this in a few minutes, but we want to get into star ratings and what that looks like. We also have been talking a lot about Medicare Advantage, but we want to talk about the impact on Part D, standalone prescription drug plans themselves. But kind of just a quick recap, the rate adjustment was higher than the initial forecast. That was positive. The fact that they're limiting the drawback on the risk adjustment helped that the percentage wasn't as great. So those two kind of came together and created a little bit better of a scenario.
Right. Especially when you have thin margins.
Yes.
Right. You'll look at some of these large organizations and, from a consumer standpoint, I know at one point in my life, I probably felt the same way, which is, oh, they make a bunch of money, right?
Yeah.
They very well could, but there's different divisions within the company. And what you and I are speaking about is the federal markets program, right? Which is i.e. Medicare Advantage in particular. And those margins have been thinned down over the last 5 to 6 years in particular. It's become very, very difficult for, these insurers to be able to show profitability, Lance. And as a result of that, this rate notice has become even more paramount, right?
Yes.
Because those few adjustments and percentages can make a big, big difference to the bottom line.
Yeah, for sure. I mean, we went kind of through that golden age of Medicare, I would say, a couple years prior to this one for 3, 4, 5 years where the premiums kept coming down, the benefits kept expanding. We'd make jokes of, hey, they're going to give out a Cadillac next year or something like that, right? And that kind of caught up with them a little bit in honesty.
Well, I think two factors, in my opinion, that played into these adjustments. One was COVID. So I want to speak about that in particular because it had an impact on the back end that I don't think anybody quite expected.
Yeah.
And number one was utilization of the health insurance benefits. The utilization nationally skyrocketed during and then post-COVID. And I don't think anybody was quite prepared for that, Lance. So as the utilization skyrockets, so does what's called the medical loss ratio, right? And I don't want to get too much into the weeds on that, but that has a lot to do with long-term revenue and profitability for the firm, right?
Right.
And when that happened, it was almost like a perfect storm. So you had administrative changes happening at CMS. They were trying to tighten the noose up a little bit, which I think we're all okay with. We want it to be an efficient system, right?
Right.
But that was happening simultaneously with an unknown event. And that was higher utilization, higher medical loss ratios, right? And it became a perfect storm that started impacting the insurers directly, where they started falling into negative margin territory. When that happens, they have to make an adjustment. And that's ultimately what we ended up seeing.
Yeah. So big adjustments, hopefully based on what we're talking about today, they're not going to be as big this coming year. But there are a couple other factors we got to get to here in just a couple minutes.
Sure. Yes.
So far, we've been talking about the impact of the final notice, big document that comes out from CMS. We talked about the rate adjustment, risk adjustment, right? Those type of things. Let's talk about star ratings, because it's not really something that we think a lot about or most people are even aware of in the insurance space. But these Medicare Advantage carriers, as well as Part D plans, are rated based off the stars. And those stars impact the revenue that they receive as well from the federal government. And they've made some adjustments to that. We're using that word a lot today, right? Talk to us about star ratings and the adjustments and what that means.
Sure. So the star rating system was primarily built based off of value-based healthcare. Maybe I should start there. So up until we had these Medicare Advantage plans, Lance, it was a fee-for-service system, right? And what that meant in layman's terms was you see your doctor decides you need to have some testing and some work done. He files it, government pays the bill, and you move on. And what we learned looking back at all of that data was sometimes a lot of those services that were rendered weren't necessarily always needed.
Yeah.
And we started to have a lot of waste in the system, right? When you hear the term fraud, waste, and abuse, there was a lot of waste in the system. So one of the ideas to help, fix that issue was creating more of a value-based healthcare system where we will pay you a set amount, Lance, but you have the opportunity, you're incentivized to even make more if you can ultimately have better health outcomes. Because I think that's what we ultimately all want, right? Is all living healthier lives, better health outcomes, which means that's going to not tax the health system as much, right? Healthier people.
Yeah.
That was in general the idea. So what they ultimately came up with was this idea of these stars rating systems, right? Which was a way of really tracking each individual contract, right, in Medicare Advantage to determine, are they actually providing healthy outcomes?
Yeah.
Right. Now, the details of that have changed and adjusted over the years, right? There's a lot that goes into it. But I think what's probably favorable from one aspect is this particular year, they actually dropped, I think, 11 different measures to create that star system. And a lot of it was procedural, administrative type work.
Yeah.
They want to weight it
Red
more.
tape.
Yeah, red tape. They want to weight it heavily more towards the clinical outcome,
Yeah.
which I think was the ultimate original idea, right? Which I think is ultimately a good thing. And that the insurers know that in advance, they can start to make systematical changes internally to be able to adopt towards it. But that star rating, depending upon what level they receive, can be additional revenue and bonuses to the insurer, which is critically important to them. In some cases, that star was their margin for the year and was their profit, right?
Yeah.
So they're all, incentivized, and they all want to be driving towards those high star ratings.
Yeah, and I think it's actually really important to kind of express it this way. When Medicare Advantage started, it started as Medicare Choice, right?
Mhm.
We want to give people a choice, right? But also behind that was, hey, if we can make their primary care $0 or $5, and we can create these preventative services that have no copay, and we can add transportation to the plan, which would help somebody get to the doctor that may not necessarily want to go to the doctor, right? If we can offer over-the-counter benefits where they take vitamins, and if we give them silver sneakers where they're going to go to the gym, like the whole concept was, let's try to create a system where people will use their health care because there's more ease of access and not a lot of expense, where they can stay healthy, right? Because the cheapest, maybe not the best word, the most cost-effective healthcare is preventative healthcare.
Yes.
Right. So that's where the star rating, I think, marries the original idea of the Advantage plan.
Yeah. So you obviously want to try and have proactive healthcare versus what we have been doing for decades, which was reactive. Lance gets sick and now you go to see the doctor, right?
Right.
Well, let's try to see if there's, activities that we can put in place for Lance and opportunities for Lance, right? And a lot of it is just educational,
Right.
understanding how to eat healthier, right? Live a more active lifestyle to potentially prevent a lot of these conditions. And if we're going to catch them, let's catch them earlier.
Yes.
We've understood that the cost, right, could be much less in that aspect. And that's where you spoke about the preventative, right, procedures. Let's offer those to people and make sure we put it out there in a way where it's not going to be costly, so we don't have that as a barrier for them to be able to do it.
Yeah. And I think that's like, some people are like, well, I don't want to use my health insurance plan because I don't want to raise my rates or something like that. Right. But like, if I have an annual wellness visit where I can go and get a checkup and they're going to be able to know if everything's good with my health, the health insurance company actually wants them to do it. Right. And then what I like about the star rating from my perspective, from a layman perspective, is the plans are incentivized to continue to improve the plans for the individual beneficiary.
Yes.
The individual beneficiary wins as a result of that, and the insurance carrier gets more compensation, which then allows them to have margin and the things that work in our system.
Yes. And if they are receiving X amount of dollars in for a particular contract, don't want to get too deep here with you, but I think it's important for people to know this. If they receive X amount of dollars in for a contract, they have to spend a high percentage of that, 85% or more of that revenue needs to go back into the benefits and the services provided, right? They don't have the option to just take it for profitability purposes.
Yes.
So if that utilization is not at a certain level, they actually have to pay a penalty.
Yeah.
And a rebate back, right? So the system, generally speaking, is built, to me, in my opinion, where it makes complete sense, right?
Yes.
We want to be able to provide revenue into a private marketplace where they are incentivized to ultimately, create healthy outcomes and have a good output, right? Now, a lot of details in between all of that, but generally speaking, that's what we're all driving towards.
Yeah, and I think there's the win-win-win there for everybody, right? If it's functioning the way it should be. So CMS in the final notice did address some of the star ratings to try to make them more. And we went through a season here where a couple of years ago, we had 2, 3 plans that had 5-star plans, right? The highest rated plans you can get. And then they made it a little more stringent, right? To make people push towards those markers even more. So it's kind of an ever evolving system.
And there's a 2-year lag with
Yes.
STARS too. So what they're implementing for 2027, whatever the adjustments that are happening within the individual carriers, it's really not going to reflect until roughly 2029. Right. But I think it's moving in the right direction. It's hard. Like a lot of it, if you look in the details, a lot of it is procedural type, right? Quality, qualifying marks they needed to meet. And I don't know exactly how that directly connected to healthy outcomes.
Yeah.
If that makes sense.
Yeah. And again, that's where it can get a little muddy, right? But, one thing I know is having dealt across the table like we're sitting today with the individual consumer, they shouldn't be picking their plan off of star rating alone, but
No,
they shouldn't be ignoring the impact of star rating.
they should not either. Yeah, absolutely, because that's showing the viability of the plan, right? Like that's important for people to know that, hey, I want to be in a highly star rated type of plan. So it's definitely important to look at that. And obviously we can get into the details
Yes.
individually with people on it. But it's important, but it should not be the only decision, the
For
only
sure.
factor you're looking at to make your decision.
For sure. And again, so we've talked about a lot, rate increase, we've talked about risk adjustment, star ratings. I think one more thing out of this document that's really important is the impact on Part D itself. Part D is prescription drugs, right? Which
You had to go there.
for people who just stay with original Medicare or they have original Medicare with a supplement, they have to get a Part D plan. And I think this has been the most sticky thing that's happened, a lot of it because of the legislation in the Inflation Reduction Act a few years ago.
Right.
What are you seeing out of this final notice as it relates to Part D for this year moving forward? That's a loaded question, by the way.
Sure. I think back to a Clint Eastwood movie, The Good, the Bad, the Ugly, right? So if I was to take that and bring that into today's conversation, when you talk about this final rate notice, you have the good, which I think that's centered around where we started the discussion, right? The rate, the official rate itself, risk adjustment, and how that's probably going to create opportunity from a revenue perspective for us to have some stability within the plans for Medicare Advantage in particular. There is some bad, right, that we've talked about briefly.
Yeah.
But the ugly, in my opinion, is probably what's happening with Part D, right?
Yeah.
And it's just the reality of the situation, Lance. I think globally, what they're trying to accomplish is probably a good thing, right? We definitely need to spread risk across many different sectors. It shouldn't all just fall on the federal government. It shouldn't be all falling on the consumer. And you and I have had these discussions offline where we feel like the consumer definitely has been overpaying for the prescription drug part of their benefit package, right, for years. While administrations, the Inflation Reduction Act, right, that is going to be fully codified in 2027. So what all that means is simply that they are going to run off of a little bit different formula than Medicare Advantage. There was a role there for Medicare Advantage that was proposed that was not finalized that's pushing off this risk adjustment in the formula and the methodology and how they determine what it is.
Right.
And whenever it's something you don't fully understand or know, you're going to tend to be more conservative,
Yeah.
right, when that happens. Everybody realized that and they decided to push that off a little bit longer, which is going to help us from a stability standpoint with the health benefits.
Yeah.
But with the Part D side of the business, that still has to be implemented in for 2027, right? So we have to have a maximum out-of-pocket cost to the consumer, which is good, right?
Yeah.
$2,100, I believe, right?
Yep.
There's going to be 3 different, phases of this now that are going to be
Tiers,
implemented
yep.
in. Yep. So all of that stuff's going to be there. Catastrophic coverage. The consumer's not going to have to be spending money for catastrophic coverage in the future. That's good, but who's paying for it,
Yeah.
right? Insurers are taking on a much greater percentage risk there, and the methodology on how it's done has to be adjusted. So if you add those two together, and you're some actuarial sitting back at the the carrier, and you're making decisions, you have to believe that they're going to be really, really tight to the vest and trying to be as conservative as they possibly can for these Part D plans that are going to be coming up in the next selling season.
Yeah, which could mean, changes to deductibles that people would have to pay.
I think you could expect changes to deductibles. I think you're going to expect changes to premium. I think you can even expect changes to accessibility.
Yeah.
I think there's going to be some plan disruptions on that side even moving forward.
Which we've seen historically. I mean, I could go back 3 or 4 years ago. There was 30 Part D plans to choose from in a lot of the counties where we're at. This year, there's 14.
Right.
Right. So we're seeing the toll of some of this, and basically people having to leave the market in some of these areas, trying to make affordability for people. And again, for me, like for the average consumer, the great separator a lot of times can be prescriptions, right?
Yes.
Because the healthcare costs, all things being equal, are fairly equal.
Right.
It's those prescriptions that they take that really matter.
Yes. And in order to swing the pendulum back, right, where a lot of it was really leaning heavily on the consumer for years and years and years, they're trying to swing the pendulum back to the middle. That seesaw effect that I talked about a little earlier, it's occurring, but I think we're earlier in the adoption of that than we are with Medicare Advantage, right?
For sure.
There's definitely some changes within the rate announcement that is going into effect.
Yeah.
It's not being postponed.
Yeah.
And I think we're going to have to expect that there's going to be a little bit more disruption into the future on the Part D side specifically.
Yeah, no doubt. And, we've talked, I think for a normal podcast that we do, we've talked a little bit more technical jargon today because
Maybe than we should.
this is a technical document, right? Like, and it's going to take 6 to 8 months to actually ferret it out to where it's to what the people need to receive, right? So I think what we want to do here in a minute is just kind of tie a bow on this and answer that question. What does this all mean for the consumer?
Well, the consumer, the insurer, the Center of Medicare and Medicaid Services, in a sense, we're sort of all in the same pot, right? We're trying to figure out how to make healthcare work nationally.
Yep.
Right. And it's a debate. You hear it in every political cycle.
Yeah. Everybody's got an opinion.
Everyone has an opinion on it, right? But what I will say is what I like about this particular marketplace in particular, Lance, is the fact that each and every year they have the ability to work on it. Yeah. And it's not just some legislative law that goes into effect, and then you're locked in with that piece, right, for years and years to come. And the only way to change it is to go back through and change it through, Congress.
Right.
They are able to adjust and work, and there's a whole division, right, Center of Medicare and Medicaid Services, that's working to try and fine tune it each and every year. Yeah. So that to me gives me a little bit of a positive outlook on this because they're trying, right?
Yes.
And we're seeing it, right, with the STAR measures and trying to incentivize for healthy outcomes. So I think that's all good. I think the rate where we stand today, what was announced, I think we're going to start to have a little bit more stability, like a soft landing in the market this year, nationally speaking, right, versus what we experienced a year ago. So I think people can expect probably not too many crazy, wild adjustments and changes that we saw in the last 12 months. So I believe that's a good thing for the marketplace this year. I don't expect a lot of crazy adjustments to, the ancillary benefits when we talk about dental, hearing, and vision, which are obviously important to consumers too. I would just be a little bit, hesitant to really expect that there's going to be a lot of positive outcomes on the Part D side, prescription drug side of the business. It's going to be advantageous to the consumer. The question that you and I have, and I know you and I live in this marketplace and we like to have options for our customers, right? I'm not sure how many options we're going to have. They're going to be competitive options as a result of
totally.
That's my opinion.
Yeah. So, if I could put it this way, I think last year, was really the perfect storm of tsunami. It was really an upset market, right? Like, plans leaving the market, PPOs being significantly affected, doctor access, right? Prescription costs. I think we're going to continue to see some, but instead of a tsunami this year, we might have a rainstorm, right?
Yes, I think it'll be micro markets.
Yes.
Right? Like I don't think nationally speaking, I think from that perspective, it's going to be more of a softer landing.
Yeah.
But again, health is very localized. So it's going to be predicated off of the local marketplace. And as you mentioned earlier, right, UPMC Highmark, they have a lot to say and have a lot of membership in the region where we do business here locally. They might have a completely different outlook, right, on this rate announcement versus a United Healthcare that's going to be represented in, every other state in the country.
Right.
It's a little bit different, right? So we're definitely going to see that fluctuation. But I do believe, generally speaking, we're going to be okay.
Yeah. So some states might be affected more than others. Some counties within those states, again, depending on the microaggression of those areas. But overall, there looks to be more stability. So that's a great thing. Great thing for the insurer, great thing for the beneficiary. So I really appreciate your time today, your expertise in this area. And I know that we're going to keep chewing on this for the next 8 months until we get to the reality of seeing the actual plans that we're going to be presenting to our clients.
Excited. Another upcoming, enrollment season. Can't wait for it.
Yeah, it's going to be great. Thanks a lot.
Yeah, appreciate it. Thank you for having me.
Some great information today that we covered related to the final notice. I know a little bit more technical than what we normally do, but bottom line, things that you want to remember is it looks like there's going to be stability as we move into this coming October, November, and December. Still might see some rollbacks or some increased prices around prescriptions, but the final notice in general, I think was very positive news for both the carrier and for you as the beneficiary. So Appreciate getting that information out today. As always, do want to take a minute and share a Google review. We appreciate all of the people that we get to work with. Your feedback means the world to us because we want to make sure that we're providing the services that are going to help you. And this one was from just a few days ago. It says, Leah and MediConnect were so helpful during my transition into Medicare. The number of choices is staggering. And I'll just stop there for a minute because it's not just understanding the rules of Medicare, what you should do, not do, how to avoid penalties. But then when you actually get into the plan selections, you could be looking at 50, 60, 70 options. And it is very overwhelming. And as she said, it felt staggering. And they helped me through the entire process, from completing the needed applications to choosing a plan that fits my needs. Very happy to have found them. And I just love the overall thing because that's really what we do. It's not just, hey, let's have a phone call, tell you what you need to do, and then you got to figure it out on your own. We help you understand how it works. If you need help signing up for Medicare itself, we can assist with that. Once you choose the plan that you want to be in, we also assist with the paperwork on that. And then our amazing client experience team is going to follow up within the first couple of days and up to 21 days, just making sure you received your cards. If you have any other questions that came up in the time frame. So again, love the feedback, love serving you. We appreciate you taking time to tune in today. Want to encourage you. Obviously, this is available on YouTube and other social media platforms like Facebook, Instagram, LinkedIn. Until next time, Medicare Made Simple podcast. I'm Lance O'Brien. Thanks for joining today.